Bring back potato. Where is potato? That's a good question. Oh, that is not the potato we want. So, hi guys, I'm back and well, I'm talking to myself. But anyways, I'm back. It's been a minute. I don't think I streamed at all this week, which is surprising because I've been streaming like steadily for the last like 2 months or whatever. Actually, I think it's been longer than that. I've been steadily streaming for quite some time. Um, but yeah, why are we here? Um, let's just get into it. So, first of all, um, I need to make a chart for this. So, today I actually fell asleep, so I was not able to take any trades, which is fine, it's not the end of the world, but there were a couple. So there was this one right here, and then there was, oh, no, am I on the right day? This is Thursday. Just kidding. I don't even know why that happened. Okay. I guess maybe I thought this day would last longer. Okay, so today I actually missed two. So I missed a sweep sell and a sweep buy. So basically, I actually don't think I filled anyone in on what happened. So first of all, here's what went down. I was trading without any rules. I was just arbitrarily entering, and to show you an example of me arbitrarily just entering, what? Sign in. We're undergoing some blah blah blah. Okay, whatever. I don't care. Um, oh wait, you can't see. Oh, 1 second. Let me just fix this. Let's put it over here, and then let's go here. Okay. So as you can see, this is what happened. This is what happens. So I was trading arbitrarily, just randomly entering, and you see this is what was happening. I lost 300, 300, 200, 300, basically just a succession of 300. It was down like 1200 on the day, made back 500, but I was down 700 on the day. Then I lost again 200, 200. So a series again of basically just 200, 200, 200. I think it was down 800 on the day. So I was just, and this was at night. I think I was night trading this. Yeah, this was at 1826. I was trading, and then these ones were at 8:15, 8:30. Yeah, I was just randomly, I was just randomly entering anything and everything, trying to yeah, just trying to kind of like try to make back, just make stuff back. And the biggest problem was I didn't have any rules. I had zero rules for trading. I just arbitrarily was just entering. And so I was like, okay, this has to stop. I need to have a specific set of rules that I can only trade this, and I have to have a stop trading, because right, four trades just back to back, and then a fifth trade, what if that trade I lost too, right? And then again, four trades back to back, just absolutely ridiculous level of just not execution, but just management on my part. There were no rules. And so that's where this came in, right? This trade was taken on the 24th. One trade. This was at 9, about 10 o'clock. This one was at 9, this one's at 8. So and this is the course of 24, 25, 26. This is 3 days. Only three. One trade per day instead of four trades back to back. And so, um, yeah, so again, so why? Because what was happening was I had rules to enter, but I didn't have rules to exit, and I didn't have rules to when to sit down, when to get up. So I was randomly just sitting down, like, oh, maybe this time, maybe this time. So I set a very specific trading strategy. So for liquidity, first I got rid of, well, actually I should say I did get rid of LuxAlgo. LuxAlgo was being weird. It was putting liquidity at weird spots that there wasn't liquidity. and it was just being weird, and it was based off of Wix, and it wasn't a vibe. It was not a vibe. It was not working for me. So I got rid of, well, I should just get rid of it entirely. There, Lux Algo liquidity sweep. So now I'm using Big Beluga liquidity zones because they target specifically highs and lows and places that are relevant, and they also have these zones where they have the liquidity actually come down here, and it extends to where people are actually placing their stops, which is in line with where people would actually place their stops. So also it was just giving more accurate signals, and I didn't back test it, but it was giving better signals. So, and it's the same thing. It's liquidity sweeps, but it's not as, the other one was giving like placing liquidity like in the middle of something like this. Not that there was, but like it would place liquidity in weird spots where it could have been, but then it was just giving a lot of bad signals. Like here's kind of a bad one too. But then the alternate is that it tells you, okay, the liquidity claim point. I don't know if you saw that pop up, and this is probably where we kind of want to zoom in and so that we can see exactly what we're looking at, because yes, I want it to be absolutely clear. So let's just zoom in here. Okay. So right here, you see these little red circles, and if I hover over it or click on it, no, wait, hover, click, 1 second, hover. No, maybe this one. Okay, it says claim liquidity point. So when it claims liquidity, I want to see an immediate turnaround from that. So for example, this one, the circle's hiding. I can see it, but it's literally right here, but you can barely, maybe if I zoom in, like really just zoom in. Okay, but you see that circle, it only pops up if I do this. That circle, okay. So once it claims liquidity, it has to reverse immediately. So once it does that, once it reverses, that's where you enter, right? Right after that. Now, I should have entered, but I actually fell asleep and I was napping, and so I saw this after the fact, but yes, beautiful. Now, what are the other caveats? So there's a couple. So one, you can only take a liquidity sweep after we have swept the 15-minute range. So first we wait for the 15-minute range to form right here. Then and you can see this over here as well. Here. Oh, and actually you can't. I have the other chart sort of. You can kind of see it off to the side, but it's probably really hard to see. Anyways, so first you want to wait until it sweeps liquidity. First you want to wait for it to break above or below the 15-minute range. So this is a liquidity grab, but I mean there was liquidity here, but you don't look at that, you don't count it because we haven't broken yet. Okay, once we break, and we did right here, we broke out. Okay, so now you want to look for that liquidity sweep, which again, we had a liquidity sweep right here, and then it has to be an immediate rejection, which is here. And then you're selling, and our target is 3 bricks. Our target is 3. We set it to 3 because after doing some analysis over my other data that I had, let me see, can I find, where is that data? Okay, it's right here. Oopsie, 1 second. I have to make sure you guys can see it. Okay, so here's my, okay, sorry. These are a bunch of jobs that I applied to. Wow, Pop, what are you eating? He's over here chewing on a bone. Okay. Liquidity sweep. Sounds like he's breaking teeth. Okay, I might have to take that away from him. So yes, right here. So based on this data, I was looking at what is not just like profitability percentage, but also what is the edge percentage. For example, targeting 1 brick, the edge percentage was 71%. is our win rate, which sounds good, but the edge only has 4.3%, which means that is a very tight window. 4.3% of where there's actually where the edge lives. And so this doesn't is even though that number is high, the survivability when you're having to take all of these trades becomes extremely low, right? And also because this R to R is a it's a 0.5 R, which means that for every two you risk, you only make one back. For every $100 you risk, you're only making $50 back. So you can't with a 0.5 with a 4.3% with a 4.3% what was I saying? Yeah, with a 4.3% on on edge, that edge is just it's not good. Also, I looked it up. Typical traders, their edge is between like 5 to 15, but like 15 is good, right? So then I'm like, okay, what about a 2-brick target? That's a 1-to-1, so a perfect you're risking 2 bricks to make 2 bricks, a perfect 1-to-1. Okay, what is that? So I ran the numbers not just for New York, only for New York and London, Asia. So together I ran the numbers and it goes up to 8%. So that is for a 2-brick target, you're looking at an 8% edge, which is good, right? We want it to be between 5 and 15, so that's good. So I'm like, okay, I can live with that. I can do that, right? Because if it's a 50-50, right, and we're just barely over that 50%, well, here we are a lot more, right? So that means that you have an 8% leeway where, like, so for example, if you took a perfect 100 trades and you have like, let's say 58 trades that win and wait, what's the math? I don't now this is showing my colors. I don't know math. So basically 50-50 is break even, right? Which means 8%. So if you're 8% over that, then you're at a profit, right? So if you have 100 trades, right, you need 50 to win and 50 to lose to hit break even. So basically what it's saying is that for every, and correct me if I'm wrong, but for every 100 trades you take, based on the distribution, you'll probably be sitting at like 8 trades, right? Like based on the distribution, you're sitting at like 8. Whereas with this one, based on the distribution, you'd be sitting at like 4.3. Now I'm like, okay, what if I ran 4 brick? I'm like, okay, what if I do a 2-to-1, right? So for every 1 or for every 2 bricks, you're targeting 4 for a profit, right? So a 2-to-1. What's that? So after calculating, that was about I want to say 16%, but it could have been like 15%. Let's be generous and say it was approximately 16%. So targeting 4 bricks, 16%. So we've doubled this. Even though the win rate percentage is low, right? You're sitting at 37 and 39. So you're not even at 40%, but you're still making back more than what you lost. So we're sitting at 16%. Okay, so I'm like, okay, what if I did 3? What if I targeted only 3 bricks? That's a 1. Oh, you can't see that. So that's a 1.5 ratio. Okay, so so basically an equivalency of this. So for every 2 trades that for every 2 trades that I win, would be 60 ticks in profit. So for every 2 trades, I think, no, yeah. So 60 ticks is the target. So for every 2 trades I win, right, I can stand, no, sorry. For every 1 trade I win, I can stand to lose, what is that math? Come on, you can do this. Okay, let me pull out my calculator so I don't get this wrong. Do. I'm like having like a brain freeze. Okay, what was I even saying? Okay, so basically you're risking 20. No, no, sorry. Why do I keep thinking you're risking 20? You're risking 40. That's where I was getting it all twisted. But you're risking 40. I was thinking 20. I don't know why. So you're risking 40 ticks to make 60 ticks. So that means for every 2 wins, you can withstand 3 losses, which here, if you had 3 losses, you would need 6 wins to make up for that. And here, if you had, um, 2 losses or 3 losses, you need 3 wins to make up for that. Um, but here, if you had 2 losses, then you need, um, then you need 1 win. And here, if you had 2 losses, you'd need, um, gosh, I just lost what I was saying. Three. I think I was saying 3 losses. What the hell? Anyways, the point of the matter. Okay, let's just do it in terms of bricks. Okay, 2 bricks to 1 brick. So here you would need 2 wins to make up for 1 loss. Here, right, you would need 1 win to make up for 1 loss. And here you would 1 win would make up for 2 losses. So that means here 1 win would make up for a loss, but just 1 loss. This one would make up for 2. But here's the edge. We want to know what the percentage is? Pup? Wait 1 second. Pup wants to go out. You want to go out and go in the dark? Okay, so you want to know what the edge is. So the edge is this. 1, 9, 19%. It's actually greater than this one. So 19% is the edge, and you have a little bit better of a profitability curve. Now, looking at this, it doesn't look so great, but okay, 19%. Okay, so now let's talk about this number, right? Let's talk about these numbers. Okay, so my problem was I didn't know what I should be targeting, right? I was just randomly testing everything, so I didn't know what to target. Then I had a problem with not knowing when to stop trading, hence several losses in a row, back to back to back to back. Then I didn't have any structure to say when I was sitting down to trade. Am I randomly sitting down at 7 o'clock at night, 10 o'clock at night, 4 o'clock in the morning? I didn't have any rules. So now we have a very strict rule. Because here's the thing, a lot of strategies work sometimes. Almost all strategies, unless it's really terrible, all strategies to some degree do actually work. They do. And so, but the problem is, the problem is that even though some strategies work some of the time, if you don't channel it and you don't gatekeep the trades, you end up sitting down randomly at 8 o'clock at night, or like right now, except for it's a Friday night, so I can't even trade, but sitting down and being like, oh, that looks like a good trade. Oh, I lost that one. Well, I'll just enter again, and then there's no rules. So the hard rules are this: 15-minute range has to form. Then we have to break the 15-minute range. I don't care if it's a break and hold or break and whatnot, but it has to break the 15-minute range. Then it has to sweep and grab liquidity. It grabbed this liquidity back here, but you see the line extended all the way up here, which is a lot better, right? So then we grabbed liquidity. Then what did we do? We immediately sold back down. That's where you're entering, right there. And you're selling immediately. Okay. Same thing. Now, this one swept inside the range, but it still counts. Why? Because we already broke the range, right? We already broke the range. Once you break the range, any sweeps are fair game. But if this hadn't broken, let's say it just chopped, and then we swept this, you can't buy because we didn't break anything. So once you break, okay, because breaking, and the reason why is because when you break the range, the 15-minute range is a very valuable, it's a very valuable asset. A lot of people use the 15-minute range to gauge on when to enter, where to enter, market direction, etc. A lot of people utilize the 15-minute range. So why can't we, right? Why can't we utilize the 15-minute range as well and wait for some of that volume to come in, wait for interest to come in, and look for some direction? So this is just an example based off of, one second, this bothers me sometimes. Okay, so this is just an example based off today. Two beautiful wins. But let's look at the previous days. Now we have to screenshot. Why we have to screenshot? Because we already know that the that back testing is brutal when it comes to Renko, and it's never right. So let's, what day is this? What is this? Oh, sorry, this is the wrong thing. My bad. Hold on. Okay, so we're gonna start Friday. So we started Friday, and then we didn't start trading Friday. As you can see, I only traded 3 days, but there were, a few extra days that I missed. Zazia was chewing about loudly in the other room. Okay, so here's what we have. Now, let's let's look at this. Okay, so first, what happened, right? First, what happened was we established the range, right? Established the range. Then what did we do? Because here we actually did break, right? Oh, wait, you can't see that. Let me move this over so you can see. Okay, so right here, we actually did establish, right here, we actually broke because this was you can kind of see it just a little bit, maybe. Yeah, right here, there was a liquidity here, and we grabbed, it would have extended up here, and then it would have been grabbed right here. So we did grab liquidity, but what's the problem? We're still in this 15-minute range, we haven't created anything. You wait for that to be created, okay? 15-minute range has been established. We break it. Second you break it, okay, now we're in business. Now we can start talking, looking for sweeps. We just created liquidity here, so now we're chopping around. We finally swept it, so it would have extended up. We swept it here, and you sell immediately. And it just sold and sold and sold. So yes, that is what happened there. Now, if you look over, okay, this is going to be difficult. If you look over here, and I'm going to have to move the chart just a little bit so you can see it. Same thing. So same thing. I'm going to show you what. So we see this, we have bricks forming above. But now I'm going to show you the same thing but on the candle chart. Okay, so right here, same thing, but it's on the candle chart. So we wicked above several times, and we finally broke, right? But that was the break that swept this, right? Because this was building a lot of liquidity, and we swept, and then we sold, right? So so this was important to say. We never broke and held above. We never really did. We were kind of just stayed wicking. I don't care about wicks. If we form a brick, okay, if we form a brick, then it counts. Okay, if we form a brick, it counts for me. I don't care about wicking and all this and that and the third. Okay, So let's pull up the next day because that was Friday. I think I got Monday and Tuesday mixed up somehow, but yeah, we'll just do that. Okay, so here is our range right here. We just kept buying. There was some, as you can see, um, these little red circles are where there was liquidity that got grabbed, and we just kept buying and buying. Okay, well then what happened, right? The range formed, and we just broke out of it. We didn't care. Okay, so now we're waiting for there to be some liquidity because I don't think there was any. So this is where there was liquidity right here. So now, and you can see the dotted line, it extended. So we're waiting for a sweep of that. We got a perfect sweep, boop. You sell right here, boom, boom, boom. Beautiful. Now there might have been more. Honestly, I don't know because yeah, there actually probably would have been more because there was liquidity here, and it looks like we may no, maybe not because we looks like we grabbed liquidity, but it was further down. So I don't actually know what happened after that. Um, but yeah, so there's that, and then let's go to the next one. Now I didn't zoom in on where the 15-minute range started, but I highlighted the losses. So um, I don't know if you can see. Yeah, this was around 9 o'clock. Okay, so there was liquidity somewhere back here, and then we do the dotted line. We swept it, and I think I did enter this, and it lost, or maybe I missed entering. I don't know. I think I missed entering this one, and then it lost, right? And then we have liquidity here. We built some down there. We came up. We grabbed this liquidity, right? We grabbed it, but we didn't sell. And then there was another one. There was another one somewhere here, and we grabbed that, and then we sold. And this is where I entered. And I actually do remember this trade because it was kind of chopping, and I was kind of getting a little pissed. I wasn't pissed. I was slightly annoyed. Anyways, so yeah, I do remember this one. Um, and yeah, and it did end up selling. It ended up selling quite a bit, choppily, but it did sell. Um, and then there was a third one. Obviously, there was liquidity here. It looks like we grabbed it here, not here. So this wouldn't have counted. And then there was liquidity here, and then we grabbed it here. So this actually would have counted, but that's where the next rule comes in. I don't think I talked about. I can only take the first two setups, right? First two setups maximum. I can't take one, lose. Let's say that one lost, and then I got mad and I was like, I'm gonna take the next one and the next one, and I'm just gonna disregard this and I'm gonna take this one. No, once you take two, done. That's the other rule to protect equity, right? Because yes, theoretically, I could have taken this one and then it would have ran. Actually, you can't even see it. Yeah, I could have taken. My bad. You can't even see that one. This one is literally right here. Yeah, I could have taken this one right here, grab liquidity, and it could have ran, right? But that's part of the problem is I don't want to be trading every little occurrence because I don't want to lose, right? So I had to limit the number of trades because before I took 4 trades and I was just losing. So I limited it to 2 trades only, 2 trades. So let's look at another day. So this day right here. Okay, so let's go back. Our 15-minute range formed and we broke. Okay, cool. Then we got a sweep right here. So there were numbers. So there was one here, here, and here. And finally we swept and we got a red. This one lost. It lost pretty quickly. I think I did take this one and it lost. But then I don't think I took this other one. I think I saw it, but I didn't take it. I don't really know why. Um, Yeah, I don't think I did take that one because I only have one loss documented, so I only took one of these, but they both lost. This one did a double sweep, right? Because we swept, but then we kind of just popped up again, and this was pretty fast too. It popped up again and then it just sold, and I was just like, why? Why? Um, And then this one right here, same thing. So we have our dotted line, liquidity, and it swept, and then we got a red, and this one just didn't go. Said nah, nah today, and it lost. So that was two losses back to back. Then let's go to the next day. So this day we formed our range, right? This is our range. Okay, now this is key. We did break the 15-minute range. We broke it, but if you look over at the sorry, I gotta move this whole thing over. Okay, so let's move this. Okay, so if you look over here, right, we did break, but look at what kind of a break that was. It was just a wick, but I still counted it because I'm like, it broke, it, I'm counting it, right? So it did break. Um, yeah, it did break and it did sell. It was a choppy sell, and I think I do remember taking this one as well. It was a choppy sell, but it did sell. I do remember because I took profit down here and then it kept going. But yes, so I did take this one and it was. Then I remember, oh, sorry, you couldn't even see that. Let me, I'm looking over here and it's not the same. Okay, so yes, what I was saying was I do remember taking this because it broke, and it was break enough for me. And then I do remember getting in here, it chopped around quite a bit. I was having a field day, and then it eventually took profit here, and then it kept selling and selling and selling, so pretty sweet. Um, but then also what happened was scroll. So I remember this formed too, and so we did sweep, but we didn't get an immediate sell, so that didn't count. And then we got another sweep right here, and we did get an immediate sell. This should have almost formed, but it didn't. And then we sold, and so I was like, okay. And this was also a liquidity zone, and it just tapped it. So I was like, okay, that's all I needed to see. I thought about entering this, but we were in such a buy heavy state, just all that buying, that I was like, it could sell, but I don't want to enter, because if I enter, I'm already like preloading an excuse for why it lost. And then, if it wins, I got lucky, but if I lost, oh, it makes sense. And so because of those reasons, like because I was already like not in a headspace to win or lose appropriately, I wasn't neutral. I was like, I can't enter that. So I didn't, and this one ended up selling. I know it sold at least to here, so at least to the bottom, the top of the range, but I don't know how far it went after that. Wait, that was yesterday. I probably could just look back on the actual chart and see how much it sold. This was Thursday. I should still be able to see Thursday. That was Wednesday. What the? Okay, Thursday. Let's see. Swapped. Oh, yeah, I can still see it. Okay, yeah, it did. It sold. Yeah, it did. It ended up selling down to here. And then it did chop. It came all the way back up, but my entries here, my entries here, my stop loss is up here. So technically, it would not have hit my stop loss technically, and it did end up dropping significantly. So yes, that was Thursday. Okay, so I can see Thursday. Okay, yeah, so that was Thursday. Now let's go, and we already just saw today, same thing. Can't take anything in here. We wait for it to break, and then we go wait for the grab, etc. So what does that mean in terms of numbers? So let's do our numbers chart. I think I'm going to do this maybe at the end of each week, and instead of the beginning of each week, or just during the day, because it takes a lot of time and energy to constantly be like, oh, I gotta stream, I gotta do my charting. And then it almost starts to feel like kind of like an annoying chore that you just don't want to do anymore. Um, so yeah, I am going to pull up my chart. Let's see if I can find it. Okay, let's pull up this. And then we'll go to our here, this thing. Okay, so basically I want to use this chart because I don't want to make a whole new one. But I want to do this. I want to do an equity curve. So basically, each day I plot what the trades are, wins, losses, etc. Now I already plotted that on my on Chat GPT. I had them plot, said them as if they were a person. So I already had Chat GPT kind of write out the numbers. So I'm just gonna pull everything and pull my data from there, and we'll just start doing it that way. Okay, because let's see. Yeah, our max drawdown was using, okay, let me just focus on this real quick. So we'll say day end of day equity, and and then I think that's all I need to do. So okay, so this is starting. Does the day, I don't think the dates matter. Okay, so I'll just say day 1 and then day 2, and then hopefully it just auto fills. Okay, good. Okay, and the end of day equity. So at the end of day 1, right, we were up 3,000 because each win is 60 ticks, and 60 ticks times 50, that's if we're using 5 full contracts. So at the end of day 1, we're up 1, 2, 3, and I'm gonna put this in dollars. Okay, I can do that after. Okay, so then at the end of day 2, we had we had one more win. So at the end of day 2, we had 6,000. At the end of day 3, we had 7 because there were 2 trades, and 2 of them, and 1 of them lost and 1 of them won, so it was only up 1. I think that's right. Anyways, so confused. Okay, so 7, and at the end of day 4, we were only up 3 because we lost 2 trades in a row. And then at the end of day 5, we had 2 wins in a row, so that was 9, 1, 2, 3. And then at the end of day 6, we were up, which is today, 15, 1, 2, 3. So we only have 6 days so far. Let's put this in dollar amounts. Okay. Oh, can you even see? It's kind of hard to see, but it'll all make sense. So now I'm going to do an equity curve line, which basically, let me see if I remember how to insert a table. Okay, this is a column chart, but I want a line chart. And then, okay, data range. So on the x-axis, I want days. Yeah, on the x-axis, I want days. Hold up. Okay. series. What? I want this. Okay. I think that's right. Um, hmm. It's pulling information from here, but it's not pulling. Maybe it's because I don't have access titles. Horizontal. Okay, but like the legend? No. Okay. Setup. It's not pulling the days. I want days. What's B? Oh, that's C. Okay, 1 second. X. Oh, I never added the x-axis. What the? Okay. Selecting the range. Okay. Why doesn't it like me? I don't know. It's so random. Why does it say G36 and C35? What? I'm so confused. Like, actually confused, though. Oh no! What is this suggestion? Okay. Huh? Aggregate? What happened? No, 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 no. Guys, I don't know what I'm doing. I've set up many a chart and now I don't know how to do a chart for some reason. And I've had multiple charts before. Okay, it's okay. Why was that so hard? Why? Anyways, moving on from that atrocity. Point size 2. Color black. Okay, good. So, as you can see, the reason why I have this is because I want to see how this survives long term. For example, our curve was up, then it dipped down sharply. What I don't want to see is I don't want to see negatives. I ran the same thing if I only did 2 contracts. Obviously, the number isn't as huge. So max drawdown with 5 contracts is 4,000. Max drawdown with 2 contracts is 1,600, which is more doable on a prop firm, at least starting out. Okay. Now let's talk about one more thing that I did not mention. Okay. So I was talking with chat and I'm like, okay, so far, right? So far, every winning trade has gone 6 ticks or more. Every single one. So if you look at my images that I have, right? Every single one that won, right, went over 6 ticks. And 6 ticks is, hold up, let me go find it. Right. And so with that, hold on. What is the same numbers but using a a 120 tick target. I don't know if Chad understood what I was saying. Um, okay. So basically, if you're targeting, and this sounds gonna sound crazy, okay? Um, Hold on. Okay, wait, can you do it in the same format? Because it looks weird. Like I want to see end of day one. I want to see like the multiplication and etc. Because this formatting is weird. Let's see what it does. Right, so targeting 120 ticks each time, not just 60, targeting 120 ticks. What we have, so each loss is 40, the target is 120, and we already know that each trade went at least 120 ticks. The ones that won, the ones that lost, that didn't even go three, they just lost, right? So the number doesn't go down. But here's what we have. So day one, at the end of day one, with 5 contracts, 120 ticks, with 5 contracts. Why is it multiplying by 5? Hold up. Okay, yeah, that's where the number was so wrong. I was like, what? Okay, so don't multiply by 5 or 2, and don't do the 2 contract. Okay, do the do the 2 contracts, but don't do. Okay, so what you're doing is 120 ticks is the target. 50 is the dollar amount. So don't multiply an additional 5 or an additional 2. It's 120 times 50, and then 120 times what would it be, 20. So if the target is, so if the number of contracts is 2 contracts, you're multiplying by 20 or $20. And if it's 5 contracts, you're multiplying by 50, which is $50. So yeah, that's where you got it wrong. Yeah, ChatGPT got that so wrong. I didn't make it very clear, so let's see what they say. Okay, so here we go. Correction. So at the end of day one, we would have, let's just do the total. I don't want all these numbers. Okay, so at the end of day one, so basically at the end of, where is the equity curve? Okay, so here at the end, our equity curve here is 15,000 at the end of 6 days, whereas with 120 tick target, it's actually 36,000. So it actually more than doubles when you increase. I don't know why that is. That's weird. And then with 2 contracts, it sits at 14. If you were just trading 2 contracts over the course of those 2 days and you were targeting 6 each time, or 120 ticks each time, that's at 14,000 at the end of 6 days. Okay, so sounds good, looks good. 6 days where every winning trade went 6 ticks or more. Some of them went over 10, but I just averaged it out at 6 because that was like the minimum, right? So, okay, sounds good, looks good, is good. Okay, now here's the problem. I can't change my tick size. I cannot change it to 6. Why? Because I only have 6 days worth of data. I cannot change an entire process. 3 is good, right? 3 is good. With 3, we already know that we have about a 19% um edge, right? We have about a 19% edge with a 3 brick target. So we're not gonna double the target, even though it sounds good. Um, yeah, even though it sounds good, I cannot double that. Not without more data. Like if I got like 40 trades, like if I got 40 trades and all of them went 60, that's something. But six trades where all of them went, six bricks, no, that's not enough information. So that's where we are in terms of, get rid of this. That's where we are in terms of, one second. Oh, yeah. So yeah, that's where we are in terms of this, right? We have very clearly defined rules that cannot be changed, right? Those are the rules. And we're just gonna see, because we already know that liquidity sweeps work sometimes, like a myriad of strategies, they all work sometimes. But it's not about the sometimes, it's about channeling and controlling the sample and your emotions, okay? And I clearly was not doing that because I was trading random times. There was no number of trades, there was no limits, there was nothing to protect equity. And so, like that, you saw that one day I was down like $1,200 trading micros. $1,200 on micros because of four bad trades in a row. And yeah, it was a pretty sad time. And there was nothing to say, stop trading, don't trade. That's not in your rules, right? Because when you're not trading, when you trade outside of your rules and you lose, you already know you did bad. You trade outside your rules and you win, you still know you did bad. But if you don't have any rules, it's a free for all. Okay, so that concludes liquidity sweeps and gold. Okay, so now what do we have here? You saw this in the beginning, and I'm gonna bring it back. So drum roll, please. Boop. Our friend we all know and love and hate sometimes, but we have the Nikkei. I finished this Rubik's Cube. It was, well, actually, I use a Rubik's Cube solver because can I solve a Rubik's Cube? Absolutely not. Absolutely. And I just messed it up. Uh-oh, I'm screwed. Oh no. We're toast. We are toast. Maybe if I do this. I didn't break it. Okay. It's a miracle. Anyways, so the Nikkei, the bane of my existence. Have traded, I have made the most money on the Nikkei, and I've lost the most money on the Nikkei, probably. No, that was probably the NQ. Actually still traded. I've been trading gold for a solid year. I have not wavered from gold, but I have a problem. Okay, I want to trade the MACD, and gold and the MACD, as you can see, sometimes they work perfectly, right? Sometimes you get a clean, you get a clean buy right here after MACD, and you just buy. But then you get a lot of choppy stuff, like stuff going on like this, and it's like, what's going on? What do you do? Nonsense. So I'm like, there's gotta be a better way. There's gotta be something else that responds better to this signal. And then I remembered good old Nikkei. I used to trade the Nikkei like there was no tomorrow. It was my only thing I traded. And what I liked about the Nikkei was that one, I could set a trade and walk away because it moved so slowly, and two, I did so I traded support and resistance, but I also traded the Nikkei. I traded MACD, so wherever MACD would flip is where I would enter. So if I saw a MACD flip, I would enter, but I only did so when dun, 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 dun. I only did so um when we were on a candle chart. I have never used a Renko brick chart, and the reason why is because the Mac, the the Nikkei prints things very weirdly, and so you can get just like for example, price will skip a lot. So sometimes it'll start here, and then you can see on like the DOM, um, which is the depth of market where like the trades are being placed. You can see on the DOM that you know price is trading up here, but price is still technically down here. So like for example, you might get a break that prints here. You might get a break that prints here while price is trading up here. So when you enter, it puts you in up here, and then you have to put your stop loss all the way down there. So yeah, sometimes the Nikkei is not great. And I also did not have a system to trade the Nikkei. So let's build a system. It doesn't have to work, it doesn't have to be flawless right now, but rules, right? Because once you define rules, okay, you can tweak them to I don't know, make up for things or whatever. But there has to be rules. There has to be rules. So first, I don't want to overlap trading. I don't want to overlap. See how short this, oh, you can't see it. You see how short this is, this little box? This is 1 day. But now look at this day. Huge. Because it has to do with how much price moved. And here, price didn't really move a lot. It kind of just traded a little bit. So we got a little box versus a big box, and a decent sized box there. But anyways, so yes, how can we trade this? Now I don't want to overlap. I don't want to trade break of 15-minute range because yeah. Now we also know that the Nikkei likes to move in tandem during New York. It likes to move in the same direction as like the NQ and stuff. Not always, but most of the time. Now let's fix some things. I want to get rid of, actually want to get rid of a lot of things on this chart. I don't want this. UT bottle alerts are here. I don't want them, but they're here for now. 1 second. So I am going to place a special custom range. I want this to be an evening strategy. Sometimes I have evenings where I am available and free. Sometimes, rarely, but an evening strategy or even a Sunday evening strategy where you're only trading like one Sunday. Okay. So this is going to be based off of bum bum. Let's see if we got it right. Off of the open, which is this. Yeah, that's good. Okay. Now the Asia market doesn't really open until like, I don't know, 6 or something. Hold up. Do, 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 do. See right here is 6. Okay, so first I want to set this to when the Asia market opens. So even though it's 6 my time, is really 7 or 1900. Oops, 1900. And then we gotta fix this because it's all messed up. So 1900 to, I'm pretty sure that's right, right? Maybe I wanted to say, oh, did I get this wrong? Maybe I didn't want to say 1900. I said 1930. Oh, okay. Maybe I want to say, maybe I actually want to say 1900 to 19 to 19. Hold on. 1930. Is that right? 30-minute range. Okay, let's see if that's correct. Okay. Boop, 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 boop. Okay, so the key of this is going to be, and this is just a theory, but the key of this is going to be a couple of different things. So first off, we have a range form, right? This is your range chop. Stay out of it, okay? Next, you want the market to be overbought, oversold, okay? It has to be one of the two. This is just a theory, okay? So once we hit overbought, which would be right here, okay? Then what we want to see, ouch. Okay, then what we want to see from this point is, sorry, we're oversold. Oversold. Now what you want to see, hold on. What you want to see from this point is the market confirm buying right here. This is your first buy, right? But what's the problem with this? If you bought here when the MACD's flipped over, yeah, if you bought where the MACD flipped over, okay, let's say you bought here. Each one of these is 5 ticks, which means your stop loss would have to reasonably be placed probably down at 30, and each Nikkei tick contract per tick is $25. So that's if you were risking a full size, if no, it's not 4. Let's say you just did 4 contracts, so $100, right? You're already risking $3,000 right here. And then it comes down at least 2. So you're already down $2,000. Problem. So how do we fix that? Maybe we only enter after, like for example, after this is formed, right? First signal buy right here after this. But what's the problems with that? I don't know. What are the problems? Okay, so here we're overbought, we're overbought, we're overbought. Sell right here. See, sell, and you place your stop loss at the swing high, right? So you have to place your stop loss at 15, which means you should be targeting at least 15, and it only goes down 10, right? Yes, so there's an issue there, right? And then we're red. Okay, you can't actually see, but the MACD is red, okay? Even though you can't see it, maybe I can fix that. 1 second. Okay, maybe that's better. And then we move this over here. Over there. Okay, so MACD is still red. Maybe you could sell this, right? Maybe. And then we get a buy, but this isn't green, so but it does buy, but that's midnight, so I don't think we're trading after midnight. And also you can only buy once this hits oversold, and it doesn't. Okay, so let's keep going. So basically here we go, we have an overbought, 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 and then we get a sell, which also corresponds with this turning red. So you sell here, and again, same thing. You want to target. Okay, buddy. So, it goes up 15, and at least it comes down 15, maybe 17. Okay. Hi, buddy. Okay. So same deal, right? And maybe we limit it to only one trade, like don't keep trading if one lost. So that was Friday. That was Thursday night. I can't really do any more than that. Okay, we can do Wednesday night maybe. What is this Wednesday? Okay, so yeah, we can do Wednesday night. So basically here's our range. Okay, don't trade inside the range, and then wait for the market to become overbought or oversold, which it does right here. It becomes oversold. Ugh. This one doesn't count. Okay, so yeah, it becomes oversold, and then you get a buy. So you could buy here, or you could wait there, but then you have to place your stop loss way down there. So you could just hit buy. What is my, I think my ATR is like what, two? Yeah, it's two. Okay, so similar process, and maybe it's only take one because here's an instance where we were oversold. Like it could be only take the first instance, right? Um, only take the first trade, but this is like this is at what 7:05. I'm still in fitness class. And then this one that happened, I actually had group today or last night, but this one that happened would have been um yeah, right here. This one I home? I think I was home, but I was about to leave home. Um Yeah, so that's kind of my thought is wait for it to become overbought or oversold and just take the first one. But the problem is I'm usually not here. So this would be a very limited strategy that only I can only take a specific subset of trades. And maybe limited to specific days, like maybe Sunday, Tuesday, yeah, I could probably only trade Sundays and Tuesdays because I have things going on Monday, Wednesday, and Thursday. So this could be like a two trade twice a week kind of a thing. So yes, that's just my thoughts. I'm still playing some stuff around in my head. Gonna gonna sounding board this to ChatGPT and kind of see what it says. Sometimes ChatGPT makes me mad. No, it does make me mad like a lot of the time. I only ate like once today. I had a Greek salad. It was delicious. And I had like three baby cupcakes. They were also delicious from Nothing Bundt Cakes. Yeah, it was delicious. But yeah, that's pretty much all I ate. And then I had like my breakfast taco, but I mean, it's breakfast taco. What do you want? Um, yeah, I'm not really hungry, but I'm thinking about like food. Not because I'm hungry, but like because it's 8 o'clock and I'm like, I haven't eaten since this morning. No, this afternoon at like noon. Yeah, I think it was like 12:30. I think I ate like quarter to one. So it was like 7 hours ago. Yeah. So I'm like, food, but I'm not even hungry. Where's my water? That's what I need, water. Water and a good soak. Um, hey Daisy. Oh, I don't know if you heard that. That was my neck cracking. Okay, so yeah, I'm gonna probably. It's 8 o'clock. I've been talking like forever. I kind of would like to hammer this out, but I'm like I said, I'm gonna tone down like streaming because sometimes I get so focused on like streaming and like and then it turns into a performance and I don't like that. I don't want that. I would rather just just do my thing. Here's something beautiful. And we became oversold, and then what do? Boom, we buy. It sounds simple. It looks simple, but is it that simple? I don't know. Is it? I don't know. Um, cause yeah, like we're overbought. I'm sorry, we're oversold. Buy. You only get like one brick, which is sad. This one we're oversold, and then we buy. This one we're overbought, and then we sell. I mean, it can't get cooler than that, folks. And then you just set your stop loss at the swing high. I mean, swing high, swing low. This, I love trading the Nikkei. I've always loved trading the Nikkei. Um, but I don't know what happened. I think I was impatient and I wanted like fast money, fast now. And I didn't set rules. And I mean, actually, I traded the Nikkei pretty well, actually. Like, I had days, like multiple days in a row where I just was made 2000, but then I think I lost 2000 in a day and I was still good. But I think I panicked and then I just scrapped the strategy, and that's where I went wrong. Is if I had stuck it out with the Nikkei, I could have been fine because, and I was trading support and resistance, but the Nikkei moves a lot smoother sometimes, more directional, determined. I don't know. I'll talk about it and then I'll come back. But I'm actually getting kind of tired and to the point where I kind of just want to take the. When did I get back? When did I get here? Must have been an hour, so I probably got home at like 6 something. I kind of just want to take the dog out potty one more time and then go to bed. Like, I actually can't really focus right now, sadly. But I think on Sunday I'll definitely sit down and like talk about this more and make some rules so that we can so we can trade this, and I'll trade the Nikkei and cycle it in um to just the trading journey, because gold is great. I like gold. I got a system for gold. But right now, gold is in a weird spot where, you know, the market was weird. At one point, I got a notification saying that, what did it say? It said like, no, it said something like CME, something went down and the whole thing, like all the metals closed or something. It was weird. I think metals are trading weird right now. We are holding steady above 5,000, so that's good news. Maybe things will smooth out and we'll be able to trade better. But until then, well, not until then, I'm still going to be trading this, right? But I do have two top step accounts, so one or some are going to be doing different things on different days. So that is all. That is all. Um, yeah, because one thing with this is like it can go south quickly, very quickly, um, as far as this. And so entries and exits are not, they are not what you would think they would be. Like, you would think, oh, this would be easy. It's not. It's literally just not that. But okay, I'm too tired to keep doing this.